So, what we have here is our three co-founders here represent 4 unicorns. 3 out of the 4 are profitable. And I want to now get into a little bit about design choices, right? But I think as you're building a startup, it's very important to make the right design choices at the right phase of your company. And what's interesting about, I think, the journeys of the 4 companies, I think at Groww, you guys took a distribution-first strategy, right? You first pretty much put your product out there, got millions of users, and then you started monetizing. And you monetized very, very quickly, so that's one approach. I think Meesho, you all took a different approach. By the way, were you profitable at the beginning? Like when you guys first launched, were you like, because I know you had a very low cost structure and the whole sort of thing, was that or not?
So not profitable, but for a very long time, we didn't spend much money. Like for example, as you were referring to, one of the design choices we made in the very early days of the company is we'll not spend anything in marketing. Like if you look at typical e-commerce companies before us, they've spent like hundreds of millions of dollars, maybe billions of dollars on just acquiring consumers. And we were very creative in figuring out how do we leverage WhatsApp as a distribution channel. So I think we went consumer about 2 years ago, where we went beyond WhatsApp. But before that, we already had about 50 million consumers via WhatsApp without spending anything on marketing towards them. So I think that was a big design choice that we did that helped us stay very capital efficient, scale a lot without spending too much money in getting to consumers.
And then you raised a lot of funding and then you started spending money on television ads. Is that what happened? No, I'm just asking. I mean, like, you don't spend any money, you get 50 million users on WhatsApp, and then what happened?
Nothing happened. Like
You just raised a big round, right?
Yeah, and we did. And by the way, like the last round that we raised, we still have most of the money in the bank, right? Like the good thing is most capital that a company spends toward growth happens in the early journey of the company, right? And as I said, like some bit of that, most of that happened via WhatsApp. Like when we went consumer, I still remember, by the way, like we went consumer on 5th of July, 2021, right? So just almost 2 years when we went consumer. And since then to today, it's been 2 years, and we've been top of Google Play Store in shopping category since then.
So Harsh, let's go back to you. What were some of the early design choices you all made? Harsh, that were very important, especially for you to drive exponential growth, very low cost, much like you guys, I think, right? You all didn't do much marketing. So talk a little bit about that in the early days, design choices that you all made.
So the first design choice was made when we started and we left one of the leading e-commerce company from India. So the whole thought process of, started while we were there itself.
And what was that? So be more specific, no?
No, so one of the choices we made, and actually we continue to make, is choosing the way we want to launch any offering, any additional offering, and seeing the contribution margin as the king. So whatever you spend as a variable versus a fixed is very important to see as a founder a distinction between the two. You can spend to get to a growth, you can spend to get to a PMF, you can spend to get to a place where profitability will come, but then you need to understand that is your growth conflicting with your profitability? Like, if you grow more, will you make more money or will you lose money eventually? So that difference was significant for us. And until date, like when we debate or when we discuss internally, like what do we want to build, what do we want to launch, what do we want to offer to our users, then we think like that.
Okay, Ruchi, let's come to you. I mean, you all have been profitable from the very early days at both your businesses, right? OfBusiness as well as Oxyzo. And, like B2B commerce, most folks think that, it's very hard to make money on like B2B as a distribution company, right? And of course, you all have proven that you can at significant scale. What design choices have you all made?
Firstly, just to correct that, it's not that hard to make money in B2B. Because
obviously, now I know that since I've met you.
India is the land of B2B, but it is very hard to convince a VC for B2B. That's the true line.
Yeah, very true, very true, very true. Right? By the way, I do have some partners who think that there is money to be made in B2B.
I was in McKinsey earlier, and I am telling you, after we started what we were doing, I realized that if I was a consultant, it would be very difficult for me to relate to the real India in terms of manufacturing. Kaise hoti hai,
I agree. You know, our friends Gautam Kumra, Noshar Kaka, I don't know whether they really relate to the real India.
No, they might know. I don't want to comment on that, but genuinely, right?
You just said that, by the way. You said that.
I was in
just
financial
putting words
services,
in your mouth,
okay,
you know?
so I didn't know Sariya kya hota hai, or kya, polymer dana. Okay, polymer, is it, what's the form? Liquid, solid?
I have no idea.
Sand.
Don't ask me these difficult questions.
Exactly.
I know ones and zeros.
So coming back to your question, I think for us the design choice was more in terms of saying, first of all, when we were starting, we wanted to start something which was very connected to India. I think we had a very tough time saying that what is the replicable thing which is there in the US or in China market, which is there in India. So I think most important is you should have a conviction towards whatever your idea is, right? And it should not be governed with the fact that whatever everybody else is saying, if gross margin is important, contribution margin is important, whatever, what you think is the right metric that your business will outlive your own self.
Now I want to move to the next, just building on this, which is, you know, to get profitable, you can either grow revenue. Strategy by and large hasn't worked in India. You know, grow at all costs, grow revenue, grow like crazy, you get much more unprofitable. And then funding market dries up, then you're finished. Second is obviously you could cut costs. Lots of companies have cut costs. By the way, note to media, you know, there's what's the latest number, Chandra? How many layoffs have happened in India? Like 25,000? By the way, one big tech company in the US laid off more than that, huh? So let's not make a big deal out of like, oh, there are 200 people got it. I mean, like, okay, it's like, look, I mean, these are big numbers. No, I'm just picking on Chandra because, you know, it's easier. I could pick on somebody else too. So, so let's talk about, second is you could cut costs, right? So you could grow revenue, you could cut costs. Ideally, you know, you want to just have a profitable growth, which is what you're doing. Maybe we can talk, you know, get your thoughts from each of you. Vidit, we'll start with you, right? You cut your burn by 90%. How did you do that? How did you cut your burn by 90%? What were the levers?
Yeah, I think, as you said, like the equation is generally simple. Like you have to grow your revenue faster and you have to reduce your cost. And at some point in time, the maths make sense. The toughest part in this is not figuring out which part of the P&L that you solve. I think the toughest part was like really building a culture where people value this and do it themselves. Because I don't think it can be done top down. It's impossible, right? It has to be done very bottoms up.
So tell us more about how you did that.
Yeah. So I think the first 6 months, I just spent time around aligning everyone from top to down that this is something that we get energy from, right? Like our organization, to be very frank, with the last 8 years...
You managed to create a culture where you get energy out of cost cuts.
Yeah, and by the way, that's what we did. Like last 8 years, people used to get like inspiration, energy out of achieving big growth numbers. Hey, we achieved this milestone, that milestone, and all of us come together, and then we take another big number. And this time we said, we're going to take another thing, right? Like we took a goal of being profitable for 4 quarters while growing by a particular percentage growth. And we said, if we achieve this, we will be the first e-commerce company in India to be profitable. Is that something inspirational? Yes. The answer is yes. And we basically aligned everyone from top to down. So our most senior leaders, people who report to me, we kind of created their entire ESOP grind aligned to the profitability goal for the company, like nothing else. It's not share price anymore, it is just to this. If we achieve this goal, then we basically get there. And by the way, this was a big right turn, very sharp right turn for everyone. Because people said, hey, I know we are doing profitability, but why do we have to make it such a big thing? We'll solve it for 1 year and then we come back to growth. But I said, this is a permanent change in our culture. Like profitable growth is how we will approach the business from now on, not just because the macro change, but because the stage of the company we are in, right? Like we have 140 million transacting users annually. I don't think this is going to become 1.5 billion by 10x in a year or two, right?
You know, Harsh, let's go to Groww. I mean, you all basically have a distribution-first strategy. You had no monetization first several years, right? You switched on monetization, what, 2.5, maybe 3 years ago, less than 3 years ago. And you're now at north of 2,000 crores of revenue as per, you know, public sources. How did it ramp revenue that quickly? Like, talk to us a little bit about, like, that's not normal, right? Especially in India. We don't see that. Where you go from literally no monetization to 2,000 crores of revenue plus in like in 2.5 years, right? So tell us a little bit about, like, how did you guys enable that?
We were lucky.
That helps.
Yeah, I'll tell you
that
more.
helps.
Yeah.
That helps.
That helps. No, so we...
But anyway, luck does not get you 2,000 crores of revenue and like serious pat. Okay, just to be clear. I mean, I just want to be clear. I mean, like.
No, so, yeah, we actually, frankly, we did not, I mean, we don't think as much about the profitability as I think Will thinks now, and probably Ruchi started with, because we were always, you know, if we have the core principles right, which are like, if it's a massive, massive user base that is having this problem, and we will solve it, and there is a positive contribution margin sooner or later, there are pools of profits lying around, then we will eventually tap into it. It was our philosophy. Like we don't, like on a daily basis, we don't talk about revenue and profits. Our core metrics are still customer success when they come, the order success, and the kind of growth, organic growth, and those still remains our core metrics. We did start with distribution, and actually we started with mutual funds, which had a commission, which had a revenue and monetization, but within few months we moved to direct mutual funds, which is zero commission. The sad part that time, the difficult part was, customer doesn't know that it's a free mutual fund. So, I mean, you're doing it for free, but then they don't value it. And I think there was a tough choice for us, because we're letting go of the potential revenue in the next few years, while users are not appreciating the fact that we are doing it for them. But I think the core principles, we went back and we figured out, is it good for the customer? Once they discover, will they like it or will they not like it? And based on that, we made those choices. And that helped us scale really well with the distribution. And when we had a significant positioning out there as the customer first product, as the right, transparent, honest brand, as a tech, the tech that is reliable, that works for people. So with that, we were already ready to be able to launch products that are ready in the market, that is available, and that's more aligned with, the luck part, which is how the markets were trending. There was a lot of surge in the broking side of the business. There's always a demand for the lending side of the business. So every business that we launch, once you build and establish a repo and a relationship with the users, helps you scale rapidly.
Ruchi, I want to come to you. You know, when we were doing the debrief, you had a very interesting observation that although you all did focus on profitability from the very beginning, you said that at different stages of companies, you should be careful to prioritize whether you focus on the trade-off between growth and profitability, depending on the stage of the company. I think it'll be good for the audience to kind of hear your thoughts on this. By the way, all three of you kind of echoed this as I spoke to you all.
No, I'll take from what Harsh was saying here. In terms of, they first build a user base and then monetized it, and they launched a set of services for it. If you go age old in terms of, all of us know in terms of setting up a manufacturing plant, what do? For the first year, you will actually build a capex. You'll invest maybe 100, 200, 300, 400 crore rupees and build this huge plant. And then over time, that will give you returns, right? So what they were building was an asset. It is not a physical asset, but for that was maybe a tech, maybe a set of user base, and they had invested to make it. So on a P&L line item, it is definitely an expense. But in terms of what you're building against, that expense is an asset. And I think for each founder, the most important thing is that what's the quality of that asset that you're building. If the asset that you're building can be monetized in future, or if that asset that you're building at any point in time is going to give you that return, then that is money well spent. And I think in terms of the journey, like for example, we've discussed a lot in terms of on a D2C side as well. People invest money in marketing with Google and Facebook. And now
Amazon and Flipkart.
And
TikTok.
Making,
oh no, you can't be on TikTok
making
anymore.
them profitable. But anyways, coming back to it. So once you build a brand, that brand itself or the distribution network itself is an asset. Now, for an investor, it's important to say that what's the value of that asset that you'll put, because everybody could have a very different metric for it.
Clearly, as growth stage companies, I mean, all three of you now at growth stages, you have to get profitable, right? But I think, we see too many early stage companies that are trying to get profitable too quickly without building, as you call, that valuable asset that is at a critical scale, right? So if you're a tiny company and you're profitable, you shouldn't raise external capital because, where are you going to go with that? Okay, in the interest of time, I'm going to ask each of you, along this journey, and especially as you think about growth and profitability, one mistake that you made. So maybe, Ruchi, I'll start with you. What's one mistake that you made? Rapid fire.
I think in the initial times, we as a company started a little bit of the logistics business. We realized that it could not make money and we shut it down. So biggest learning is you intuitively know what will not make money for you. So you should
This is a
take
good
a
one.
call.
If you know it can't make money, it
Stop it.
probably can't make money, and it will not make money.
Yeah,
So you
so
shouldn't do
stop.
it. That's a good one. I'm going to tell myself that too by the next investment I make. Visho.
So I think one mistake that we did, by the way, like I generally believe that all mistakes that we made were very important, right? Like, so if we don't make those mistakes now, I think some of the learnings we've had would not be there. But one of the big mistakes we had made, we realized that, hey, back in 2018, that we figured this thing out on WhatsApp and now we can go it everywhere in the world. And we launched in Indonesia, right? And we did about a year. We learned a lot by that market. I think some of the, especially on SMB commerce, that market was much more mature. A lot of those learnings we essentially built in India. But just going very broad, like doing 10 things at once, not focusing on any of them, and you basically do a shitty job at all of them, I think that was a big learning. I would say since then as an organization, we've always been very focused on few things at a time and doing a very good job at them.
Got it. I think focus, right? Not sort of wandering off into. We've had a few of our Indian startups that have wandered off around planet Earth. They all seem to have come back to India. You know? So I think it's a good thing. Okay, Harsh, let's go to Groww. What's one mistake that you guys have learned a lot from?
So I think in our business, one thing I can recall is we underestimated the need and the time it takes to get license. And on a very serious note, because see, the profitability...
You don't have an application system where you just sort of say, hey, look, I'd like to.
Yeah, no APIs for getting license.
No APIs yet, no?
Okay, yeah.
DPIs and APIs.
Yeah, that's a new DPI. I don't know about right. Satoshi is here.
Especially because you really need to own the full stack to be able to build the profitability pools that you want to have. If you have too many people, I think it's not just the friction, it's also the profit that gets split. So, I mean, tying it back to the theme, it was very important to have the licenses to be able to be here where we are. But I think on a note, I want to say that there's like still very short journey for, I think, each one of us. And in the next 20, 25 years, I think we'll make a lot more mistakes. The mistake will be not to, just not get swayed by all the titles and so far what we've achieved.
The question is rapid fire, okay? When will you get to 1,000 crores of PAT? And when will you get to 10,000 crores of PAT? By the way, the minimum number today in India, if you're a startup, if you want to go public, is 100 crores of EBITDA, okay? The only exception is if you've got a truly, truly special company, you make something that the markets haven't seen before, maybe you can be at 40, 50 crores of EBITDA. But otherwise, you better get to 100 crores of EBITDA, otherwise you got no chance to go public. Sorry? No, I don't know, but do you think market really wants adjusted now? Please try to go on a road show. No. they don't want to. They're like Ruchi now, you know? There's only one kind of PAT. There's only one definition of profit after tax. That's it. So anyway, so let's ask each of you, when do you think you'll get to 1,000 crores of PAT? And when will you get to 10,000 crores of PAT? Because at 1,000 crores of PAT, that's very interesting. At 100 crores of PAT, you'll go public, as long as, your ROCE is pretty good and all of that. At 1,000 crores of PAT, you're interesting. At 10,000 crores, Chandra at Tata Group will call you. Say you have arrived. This is BSE 50. Okay, so Ruchi, we're going to start with you.
When you invest in our IPO, we'll be 1,000 crores back.
Ah, brilliant answer, brilliant answer. No, but seriously, you're at 500 crores already.
I mean it, right?
Oh, right, okay. And when are you going public?
When you invest in us.
Okay. Okay, so you're already at 500 crores. If you're doubling every year, you're probably at 1,000 crores a year. I know you can't say this because none of you can really be that prescriptive, but that's amazing, right? Think about it, 1,000 crores of PAT, within 12, 18 months. I know you haven't said that, by the way, I've said that, so please don't tweet that. Let's go to Meesho. 1,000 crores of PAT and
Hopefully
10,000 crores
soon,
of
but
PAT.
I don't think we're going to take timelines on when do we get there. I think we're still something that we did not discuss as much, and you were kind of hinting to it. I think as an ecosystem, we go in extremes, right? Everyone right now is just focused only on profitability and nothing else. And I'm sure 3 years later everyone will just focus on growth and not on profitability. I still believe, like, I think staying focused on the mission is very important. So internally, we still take goals, and when we'll have 500 million consumers transacting on us on an annual basis, when we'll touch 10 million small businesses. So I think we take timelines on them, but hopefully soon. I think both of them are like really big goals to take. So
yeah, I think, and also I think, Vidit, what's exciting about what you said with Meesho, right? In the next 6 to 12 months, if you get profitable, you'll not only be the first scaled up Indian e-commerce company to be profitable, but maybe the only for a very long time. By the way, just the nature of the business, you know, I mean, it's not like that. Okay, let's go to Groww. 1,000 crores of PAT.
What date is today?
There you go. Getting close. Okay, no, actually for you, I think the 10,000 crore number is interesting, right? Because you all are becoming, you know, you've got so many licenses now, AMC, you know, and so on and so forth. $50 billion of PAT, that's the profit pool in the Indian banking, financial services, and insurance industry. So look, 10,000 crores is $1.2 billion, right? It's basically 2% of the profit pool of the Indian financial services industry. Is that just, I know you don't want to commit to a specific number, but is that something that you can imagine happening?
Oh, yeah, definitely. So because the 50 billion is also growing at a very steady rate, and it's going to be, it's going to be less than 1% if you talk about 10,000 crores. But really, we're not in a hurry to achieve. That's not really a milestone that we keep for ourselves. So it'll happen when it happens.
Yeah, no, absolutely. Look, you build a great business, focus on customers, make them successful, make sure you don't lose money on every order, on every loan. I think, eventually we'll get there. Okay, with that, we'll wrap up. But, I want to just end with this. Look, I think there's been a lot of debate, discussion in our ecosystem of where are the profits in Indian startups. First thing I want you all to note is you have three startup founders here who represent 4 companies because she represents 2 companies. 3 of them are already profitable, okay? And I'm not talking about 3 crores of EBITDA. Okay? That's not what I'm talking about. 500 crores. He can't tell me what the number is, but you can imagine. Just go look at the public comps in his space. He's got over, as per media, not me, over 2,000 crores of revenue. You can apply that margin, net margin number to his business, you'll figure out. It's a very large number, okay? So firstly, we do have startups that are already profitable. I think the second thing that we should all keep in mind is this current environment that we're in is actually is a force accelerator for this path to profitability, right? And if I was to guess, I'd say in 18 months from now, it'll be a very large number of our late stage companies who will get to profitability, right? And at the end of the day, it's not really about profitability. I think it's building legendary companies. So let's give these 3 founders a great round of applause. Thank you, guys. Thank you.